Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day as always out there. We're going to be looking at SoFi stock yet again. Actually, it's been a while since we covered the stock. It is down 70.66% year to date. And since its IPO a while ago, it is down 55.81% all time. So we're going to be going over this again from looking back at what I said in the past. I'll be showing you this video, for example, and I'll remind you, okay, 7 months ago, April 7, 2022, a lot of the valuation that I did here, keep in mind, I was actually being very generous to the stock because I also didn't include that dilution rate. So in fact, there's probably going to be dilution, but even though we're kind of at the prices where basically we were analyzing back then. And I want to highlight this comment yet again. Eddie, if you're out there, this guy has no idea what he's saying. Well, it will age, I guess, like however it does age, I guess. And then there was this other video where I actually do go over some concepts here, and I want to actually show you guys. I'll play a little bit for what I say. So here you go. Here's what I had to say back then. After fintech firm accidentally releases first quarter report. Okay, so not that good there. And so I took a look at it real quick. It's basically guidance. And for those of you who are newer to the channel, for those of you who are returning to the channel, you know what I'm about to say. It is think about what am I going to say? Liquidity crunch, right? So we've been talking about this for quite some time. Let's actually take a look back at the price and see what's kind of going on. We're also going to discuss briefly Upstart because I think Upstart needs a little bit of day in the sun here today. So let's take a look at the 1 year. So remember that video, and I got better at making content essentially. But we've been talking about the liquidity crunch since about November, and you can actually see here, it's actually beautiful if you actually overlay this. And we were actually talking about this at work the other day, how you see these stocks that are heavily exposed and the most susceptible to the liquidity crunch are the ones that almost perfectly delineate it when it occurs. All right, so I'll let you guys watch it if you so wish. But basically, I was discussing liquidity crunch because I've been talking about it for a long time at this point, which, by the way, I'll ask you guys, pause the video. Well, not pause the video. I'm going to pause my discussion on SoFi to ask you guys a quick question. Do you guys want me to post a video showing and compiling all the discussions I had over crypto brokerages over the course of this channel? I did have a bit of a series, and remember, I don't like to, let's say, dogpile too much on content regarding a stock. I know that there was a great opportunity. I made only a single video on FTX. So let me know if you guys want that video, basically me showing all the times I talked about crypto brokerages and the dangers of crypto brokerages, especially in a liquidity crunch, under the context of void to digital, counterparty risk. And remember, when we looked at that 1 hour, 30-minute video that I made, it appears as though, not appears as though, I did discuss this entity that was in the Cayman Islands that they had a huge exposure to. I'll need to research. And we also discussed on the update when they went bankrupt finally. Yeah, let me know if you guys want to see that video. Again, I can compile that. I've already done so with the Discord community. They've already seen the compiled clips, and I shared that with them. But I can definitely make a video about it and kind of discuss what went wrong as well. But, because I see that a lot of YouTubers kind of came in and piled on after the fact. So they didn't really even understand really what happened. Maybe only saw what happened or understood what happened because of what journalists told them. I'll give a shout out. CoffeeZilla really also talked about it, I think, 6 months ago. So yeah, good. That there are a lot of other YouTubers that did actually talk about it. Now, when we're talking about SoFi, I want to give you some more context and clarity as to what's being held on the books. Let's take a look here. So this is from their most recent quarterly report. You can see that the personal loan segment, we've talked about this in the past, by the way, this is not new information, but the personal loan segment is at $6.8 billion. It is a huge portion of their book. And this is what I would call probably a subprime book. What I mean by subprime book, Citigroup also kind of have a subprime book, not as bad as this one. This one I kind of compare more to Credit Acceptance Corporation or even something like Ally, but Ally's not that bad either. So Ally, Credit Acceptance, and SoFi all have what I would call a subprime book. They should be trading at below book value, not above book value. The only reason why someone would make the justification for trading above book value is to ignore the banking side of it and look at the technology side of it. The problem with that statement in of itself is that a huge portion of the business is still the banking, and it dominates the business as a whole. And so you can't ignore the banking side, and it should be judged as a bank. And when you look at stuff like Block or PayPal or anything like that, they're really more of a fintech pure play rather than SoFi. SoFi really is a bank and not really an enabler or a technology company. They are a technology company. And when I spoke to people who actually work in the fintech space, what I gathered from the subject matter experts is that, well, Galileo is interesting. And also, I think it's called Technesis or something like that, which is basically Galileo-esque, but for banking institutions. There's no guarantee that they're going to be or end up being the winner, or even in the top 10. In reality, it's probably going to be other players, and if it really is that lucrative, there's going to be other players that are going to be dominating, and it is already a very competitive space. They are not the only player. They have some well-known names like Robinhood, for example, is a customer of Galileo, but that doesn't mean anything really in the grand scheme of things. It just means, okay, they have Robinhood, but Robinhood as a broker is probably not going to be the most dominant broker out there. There's already other brokers that are the most dominant, and Robinhood's actually come under a lot of scrutiny. A lot of their customer base is very fickle. And, SoFi is a broker as well. It really competes with Robinhood. So it's kind of funny. And you have that kind of conundrum that SoFi is both competing against you and also trying to offer you the same services. So what is the incentive for you to use SoFi instead of a more independent platform, which is something that I haven't seen any of these people really contend with. And people who are in the software sales business will kind of understand this, because you're like, okay, if I'm trying to sell a service and my parent company is competing against the potential customer is going to be a bit weary unless we are somehow the best of the best, and otherwise them going with someone else would be actually worse off. So you got to take that into consideration. Another thing I want to highlight about SoFi itself is the delinquency rates, because we've talked about this again in the past, but I'll highlight it again because it pertains to the stock. So this hasn't changed. In fact, we've actually been seeing a rise in delinquency rates. The last time we covered this, we actually showcased that delinquency rates were down at the floor. And now since then, we've seen a massive run up in delinquency rates. These are for personal loans. So consumer loans from all commercial banks. We do see this rise, and this is very troublesome because remember, we're more likely to continue to go up. I don't think we would see a 2008 level event because that's not what we're experiencing. Again, but kind of coinciding with the liquidity crunch talks that we've talked about and how that kind of affects the broader economy as we're entering the next stage. This is going to be a bit of a concern, especially when you consider how big of a portion it is. We also have the student loan moratorium, which is also a bit of a headwind for SoFi. Again, pretty much the most exciting thing that I feel like retail is excited about is the technology company. And this is where I'll kind of make a pause to make an announcement or just talk about this in general. If you're a retail investor and you're having trouble investing in individual stocks or evaluating individual stocks, you should also pretty much consider that bank stocks are one of the most difficult types of stocks to even evaluate in the first place. So really, you don't have to be involved with these kinds of entities to be successful in life. You can just basically figure out or invest in other types of companies and never touch a bank stock ever. But a lot of people are excited about this because of the technology play. And I think a lot of retail investors really focus on the story, and that's all they really focus on, which is a bit problematic when you get into situations that you don't really understand. SoFi, Upstart is another one, all these banks, Open Door Technologies, all these guys. And it's really a shame because people really just don't seem to understand what these businesses really do and the real risks associated with what it is that they do. And also the timing of things, right? Because bank stocks, on top of trying to analyze the counterparty risk, on top of trying to analyze the individual securities risk for each asset held on the book, you also have to take into account the macroeconomic environment, which is, again, a bit more difficult, easier said than done, which, again, makes it so that, well, do you really want to be involved with these entities in the first place? A lot of you guys, since you've joined the Capital Mindset community, have come to terms with saying, yeah, I don't really want to be involved with bank stocks. I don't really care for them. And I can avoid my entire life not investing in bank stocks. And that's fine. You can be equally as successful. So if you're comparing SoFi and you're trying to say, well, SoFi should be trading at a book value of 1 at the very least, I'd really kind of question that narrative because not all banks are created equal. For those of you who are newer to investing or newer to the channel, I'll just explain book value very briefly. Book value is a very common metric that retail investors use for bank institutions where they say, okay, well, if the book value is at 1, it's at fair value. If it's above, it's expensive. And if it's below, it's cheap. That's not true. And this is, again, going back to that theme that bank stocks are a little bit more difficult to value. Book value is a good surface level metric. And when we look at Citigroup almost perpetually trades at below book value, and it deserves to be because of all the counterparty risk. Bank of America deserves to trade at premium to book. Same with JP Morgan, same with Wells Fargo. Citigroup, no. Some of the regional banks, yes and no. There's actually one of the most favored investment banks that I'm going for, or not investment banks, investments in banks that I'm going for is Wells Fargo. But speaking of investment banks, Goldman Sachs should probably be trading below book. And there's a regional bank that I've recently started to accumulate as well that I also think it trades at, I think right now it's at book, just a hair above book. And it kind of deserves so based off of what's on its books. But you have banks like Ally Bank, Credit Acceptance Corporation, and SoFi that are, I would consider, subprime in their book. book and therefore should be trading at below book. Now, if their technology platform actually does improve drastically and grows tremendously and dominates the industry, of course, there could be an argument made that it should be trading at a premium because of that underlying business. I feel like if Galileo really is that good of an asset, it really should be spun off. As far as the technology platforms, they should be spun off. They probably would experience a lot more growth in those segments if they were an independent product rather than being tied to a bank and then they're trying to convince competitors to use them. So, and again, there are competitors that already exist and they are independent, and probably in some cases, from what I heard from others, sometimes they're better products. Okay, so also it's still too fresh of a product to really understand or grasp how big it is going to be. Right now, Galileo makes such a small portion of the business. Really, you can't make the argument, and I feel like it's a really faulty argument that I've seen other retail investors make, that you should be judging this company solely on Galileo. I think that's a grave mistake, but we will see how that ages. With that being said, any comments, questions, concerns, you can put down in the comment section below. Remember to answer the question I asked. Do you guys want that video on the crypto brokers and me discussing and showing you guys all the clips, various topics I covered with the crypto brokers? Other than that, thank you guys so much for watching. And as far as the valuation goes, I'll say that my valuation really hasn't changed. If anything, it's come down because of the added context of dilution or share dilution that they might need to do. I don't think the bank necessarily is showing current signs of bankruptcy, although I wouldn't be too surprised if it does within the next year or so, or maybe 2 years, depending on how bad things get, because of their exposure to unsecured consumer personal loans, which, dang, I really don't know why you would want to own that, especially given the macroeconomic environment that we're in. So again, all old information. Who could have predicted this? Who could have thought this would happen? Clearly no one could have said that. But other than that, thank you guys so much for watching, and I'll see you guys on the next one. Bye.